Morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, October 27th, and we got some economic news scheduled for us today. So let's take a quick look here at the weekly jobless claims numbers. Last week we had a reporting of 404,000. They figured it'd be right about the same, and pretty much are, low 400,000, still above the 400 threshold. So that's unfortunate. GDP, 1.3 in the second quarter. They did figure it would jump up a little bit more, and actually did jump up to 2.5. So stock market's really liking that. You'll see up ahead, but they're really liking that. They're basically saying we're kind of avoiding a double dip here, but I don't know. A lot of things don't add up. As in, jobs are still we still have high unemployment. We still have consumer sentiment and confidence is way low. We also have home sales are way down. So again, I don't know how much I would rely on that, but again, the numbers show 2.5, and that looks like to be a good number. So let's jump on to the next one here. Pending home sales, we had a negative 0.12% and dropped down to negative here, negative 4.6. So not so good for pending home sales. So let's jump over to the headline news here. We got the stock markets up, as we had mentioned, and they came up with an agreement at the Euro Summit. So this is another catch-22. This, I don't think we're going to see the last of this. It was $1.4 trillion that came up. Looks like what it sounds like is the investors are basically cutting the 50%. So you got this on Greece, but then you have other countries like Spain, Portugal, uh, Italy, Ireland. They see this, and don't you think they're going to want their debt to be cut in half as well? Seeing that type of agreement. And those are much bigger economies, especially Italy being the third largest economy in Europe. So that's going to be something definitely to watch out for. Again, this is just the tip of the iceberg. There's going to be more to come on this, and a lot of people don't think 1.4 trillion is going to be enough to resolve this. So we'll see more to come. But meanwhile, in the interim, the financial markets are liking it quite a bit. So that's why you're seeing the stock market up. The Dow, I think, was up over 270 so far this morning. So let's see how this is affecting the bond market and where interest rates are moving. As we saw, we lost a bit of the gains. We actually touched on the 10-day moving average yesterday and pulled up, but today we open up a big opening gap to the lower end here. And as we can see, we're right here, and this can, again, if we don't hold up like this par 50 level, we could see a huge drop and have a big spike on the interest rates. That could very well happen. So hopefully this kind of maintains itself, and we're able to go upwards and maybe close this gap here at some point. Maybe not today, but maybe next week. We'll have to kind of wait and see. But again, this is where we're at today. And stay tuned and check out my offer for you folks.